Welcome to. Today we'll explore the exciting world of stock market investment and guide you on how to identify a good stock for your portfolio. Whether you're a seasoned investor or just starting, these key factors will help you make informed decisions. To begin, delve into the company's financial health. Examine the income statement, balance sheet, and cash flow statement. Look for consistent revenue and earnings growth, robust profitability, and manageable debt levels. Invest in companies with a competitive edge. This could be a strong brand, a unique product, or a dominant market position. A sustainable advantage sets a company apart and contributes to long-term success. Assess the company's leadership. Experienced and competent management is crucial. Look for leaders with a track record of sound decision-making and a strategic vision for the future. Consider the industry in which the company operates. Choose sectors with positive growth prospects and potential for future demand. Staying aligned with industry trends can position your investments for success. For those seeking income, investigate a company's dividend history. A consistent or growing dividend payout can be indicative of financial stability and a commitment to shareholder returns. Evaluate valuation metrics such as the PE ratio, PS ratio, and PB ratio. Compare these to industry averages to determine if a stock is undervalued or overvalued. Focus on companies with a history of strong and consistent earnings growth. A positive outlook for future earnings is a key indicator of a company's health and potential. Identify and assess risks associated with the company, industry, and broader economic factors. Consider geopolitical risks, regulatory changes, and other external factors that could impact your investment. Incorporate technical analysis by studying historical price charts. Identify trends, support and resistance levels, and potential entry or exit points based on market patterns. Build a diversified portfolio to spread risk across different sectors. Diversification helps mitigate the impact of poor performance in a single stock or sector. Consider your investment horizon. A long-term perspective allows you to ride out short-term market fluctuations and benefit from the power of compounding returns. Remember, investing involves risks, and there are no guarantees. Always conduct thorough research and, if needed, consult financial professionals before making investment decisions. Thanks for joining us. If you found this video helpful, don't forget to